Between a government shutdown, shifting rates, and headlines that make it sound like the market's about to implode, you might be wondering what's actually happening here in Redding, California. Well, today's your lucky day because we are unpacking the numbers and seeing what October really tells us about where things are headed. Hey guys, welcome back to another episode of Rooted in Redding. I'm Faith Barrett, your local guide to everything here in our area. If you're new to the channel, don't forget to hit that subscribe button, like this video, and comment below what your thoughts are as we post weekly updates about Redding and the housing market as a whole. Today, we're breaking down the October 2025 housing market, what's moving, what's showing, and how all of this ties into what's happening nationally with rates, the Fed, and the government shutdown currently. So as always, I like to start out with the absorption rate, which gives us the big picture. Now, this number really tells us how many months it would take to sell through all the current homes on the market if no new homes came on the market or were listed. Right now, Redding is sitting at about a 5.03 month inventory, which puts us into the neutral range. And we talked about this before, that 0 to 3 months is a seller's market, 3 to 6 months is a balanced market, and anything over 6 leans towards a buyer's market. We actually hit a peak of the absorption rate a few months back at 5.5 months of inventory. So things have definitely cooled down just slightly. And even though we are at about a 5-month inventory, what we're really seeing is buyers are holding a bit more leverage. Still, location, condition, and pricing strategy can make all the difference, especially if you are a seller. And if you can get those things right, homes are definitely moving quickly, and sometimes we're even seeing multiple offers still. Let's talk about price ranges and what is actually driving the market now. The sweet spot continues to be between $150,000 and $400,000. That's obviously where we're seeing most of our movement, but homes priced between $200,000 and $250,000 actually doubled in sales compared to last year, which just shows how active the affordable range is here in our area. On the flip side, the luxury market above $900,000 was definitely quiet. We had 0 sales this month, and the entry-level market under $150,000 definitely slowed down as well. So buyers are clearly chasing value and affordability, especially as they adjust to today's interest rate environment. And speaking of adjustment, inventory has shifted too, and that's playing a big role in how buyers are behaving. We currently are sitting at 159 active listings, which is about 17% higher than last year. That means buyers finally have more choices, especially in that $250,000 to $600,000 range. And for sellers, that just is added competition, which means you have to be strategic with both pricing and presentation. Now, homes that show well and hit the market in that sweet spot are definitely getting a lot of attraction, and the rest are unfortunately sitting a bit longer. Now, one of the strongest indicators of where we're heading next is pending listings. And this month, that number told a pretty interesting story. Pending sales jumped to 237 homes, which is about a 34% increase from this time last year. That's definitely a strong sign that buyers are still out there writing offers, even with everything that is happening in the news. Now, most of the inventory is happening between the $300,000 and $600,000 range, and even a few higher-end homes moved into pending this month. So while inventory is higher, the fact that pending sales are up shows us that motivated buyers are still making moves. They're just being a little bit more selective and waiting for that right fit. Now, I will also add for a buyer, when we look at the list to sales ratio, this ratio shows how the sales price of properties compare to their original list price. Right now, we're seeing the list to sales ratio being around 93.8%. So on average, homes are selling for about 6% less than their original list price. So as sellers become more realistic with market conditions, buyers are definitely seeing that edge on lower prices and better buys in general. So how is all this translating into actual sales and pricing? In October, we saw 235 closed sales, up 23% from comparing October last year. The median sales price came in at about $350,000, which is down about 6% from comparing it to last October. But overall, year to date, the median sales price is roughly $369,000, which is pretty steady to last year's year to date number of $368,000. So overall, we are definitely seeing months of more volatility, but year to date in changes, we are pretty unchanged in value overall. As for how long it's taking homes to sell, the average days on market from list to closing was 96 days, while the median was 67 days. That means well-priced homes are still moving quickly, while overpriced or less prepared homes are definitely sitting longer. All right, so that's what we're seeing here locally, but what's happening at the national level is shaping a lot of that buyer behavior, especially with rates and the ongoing government shutdown. For the second time in a row, the Federal Reserve voted to cut rates by 0.25%, bringing the target range down to 3.75% to about 4%. It wasn't a unanimous decision. One member wanted to cut deeper and another member didn't want to cut at all, which just really shows how uncertain things feel right now. Now, I will say this cut was the federal fund rate cut, not mortgage rates, because definitely a lot of people get those confused and say, well, if the Fed cut the rate, then mortgage rates must be coming down. Now, Jerome Powell compared the current economy to driving in the fog. And with the government shutdown limiting access to key data, the Feds basically are saying we're slowing down, moving cautiously, and we're waiting for clearer visibility before making another big move. In his address, he mentioned housing briefly, saying national activity remains weak, but housing inflation is easing, which is good news long term. So as for mortgage rates, they reacted right away. The 10-year Treasury jumped about 4.1%, and the 30-year mortgage rates ticked up slightly to around 6.27%. That really is the push and pull we're feeling locally. So, when rates dip, buyers jump back in. When they tick up, activity pauses, people get a little bit more uncertain, and they're like, we'll just wait and see. Now, the other big factor adding to all of this uncertainty and definitely affecting some people, especially if you're watching, is the government shutdown. A prolonged shutdown doesn't stop the housing market, but it definitely slows it down. Here's what that looks like on the ground. For loans, that being FHA, VA, and especially USDA, which is many rural and first-time buyer, loan programs, those are seeing some delays and paused entirely because of furloughed staff and missing verifications. For flood insurance, the National Flood Insurance Program cannot issue new or renewed policies, which can stall closings in certain areas. And obviously, with that combination of the flood insurance and specifically the USDA, without pieces in place, there's more deals that are getting pushed back or canceled altogether. Now, if we take out the loan and the flood insurance and those things that are affected in the housing market, we could just talk about the confidence. The longer this government shutdown goes, the more hesitant both buyers and sellers become. Another factor that is affected is affordable housing programs. HUD and other assistant programs are running on limited staff and reserves, which creates added strains for those relying on government-backed housing support. So here in Northern California, the effects haven't been severe yet, but if the government shutdown continues, it could start to impact sales, velocity, and pricing stability, especially in areas with heavier reliance on government-backed loans. Hopefully things open again soon, but at the end of the day, looking at Redding as a whole, the market is balanced and active, as you saw with increased pending and sold listings, but affordability is always going to be the driving demand. Buyers are still making moves, but definitely with more caution. And looking at things from a national perspective, the Fed easing rates gives potential long-term optimism, but the short-term definitely comes with uncertainty. And then you add the government shutdown, which adds another layer of slowdown that could ripple through the end of the year if it continues. In short, this is a market that rewards strategy, not panic. And as we're seeing here in Redding, it's definitely a more thoughtful, data-driven environment. Buyers are more cautious. Sellers are trying to squeeze as much as they can out of their homes. And, it's just trying to figure out how to strategize whether you're buying or selling, what makes most sense to you. So if you're watching this and you're thinking about buying or selling or even moving to Redding, I'd love to walk you through how we are navigating our clients through this market to make it a success. As always, thanks so much for tuning into this week's episode of Rooted in Redding. Like I said, if you're new, don't forget to like this video, comment below, subscribe to the channel as we post weekly updates about the housing market and Redding as a whole. We will catch you next week.